So this is a conversation we've had before, which I'm very keen on, and I think folks would benefit from your insights. The dumb infrastructure position on one hand, and then can you talk to us about what DBS is trying to do from a make banking invisible perspective, and then maybe we can get into the contrasting the two.
Right. So first, let me just go back to the talk about the make bank invisible,
Yes.
and then talk about the infrastructure. Our basic thinking is premised on the fact that nobody wakes up in the morning with the idea that I want to do banking. So banking is not the job that people want to do. Yeah, you want to save money sometimes, so on. But by and large, people have something else that they want to do in their lives. You want to buy a house, you want to buy a car. The home loan or the car loan or the credit card is the means to an end. It's not an end in itself.
Sure.
The minute you embrace this idea that you have to really understand the true job to be done, what is the customer really looking at doing, then you can really find the financial service that empowers that and hide it in what the customer really wants to do. You take the house. Today the customer goes, looks for a house, appoints a realtor, explores various houses. 6 months later, he or she will drop in and start shopping for a mortgage. And when you do that, then you're basically shopping for a price-driven mortgage. It's a large item, you just look for the best price. But if you could figure a way to start engaging with the customer 6 months ahead of time and be part of the home buying journey, helping the customer actually look for the house, compare houses, find the yield in the house, and you get the customer's mind very early in the game, then you can hide the home loan in that part of the journey. It becomes a very different experience. That's the idea of making banking invisible. You just take banking and put it away. The problem with that is you wind up becoming so invisible that you don't own the customer anymore.
Yes.
Right? So you lose the brand element. And so to me, the real analogy to think about is Intel Inside. Intel has powered the computer. The whole Intel proposition is the chip really powers the computer, and the quality of the chip is differentiated from 20 other chips you could get. But Intel nevertheless wanted to make sure that they were able to create brand resonance. And so they came up with the Intel Inside campaign, and you put a sticker on every computer, and so people know that I want an Intel chip because the Intel chip helps me empower and enable an experience that I can't get from other people. That's what we want to try and do. Be an enabler, be part of the backbone, but still create value around the brand so people understand that if my experience is powered by a DBS behind, then I will get a different kind of experience.
I mean, so I would consider DBS one of the perhaps few banks who seems to truly get this point about no one wants to do banking per se. It's just a component of your everyday life and long-term goals. But I am very interested in this making bank invisible because I think there is a continuum, as you've described, between kind of the dumb pipes and pure infrastructure play down to this differentiated infrastructure. And I think, you know, from what I understand in terms of DBS, you really want to be at this, the lesson from platforms, as it were, is that you do need to be infrastructure, but you want to be differentiated. How do you do that? How do you get to that stage? What are the steps that you as a bank have gone through?
Yeah. So I think the key thing you got to think about is how do you really embed yourself in a customer journey so the customer sees and notices a visceral difference in dealing with something that you're part of.